Hi and welcome to the Market Alert for Friday, the 4th of October 2024. Biden bombs and badflation send bond yields and black gold higher. Stocks pours into payrolls. Discussions about bombing Iranian oil facilities and soaring services prices are not what Kamala Harris wants to see, and neither do I, frankly. And US stocks finished in the red and bonds were hit, while the dollar was bid after strong ISM services and the surge in oil. And finally, bonds were hit and dollar bid as hot ISM services and PMI ahead of NFP. As I said all week, that they would pump the dollar back to the upside following that support at 100. Economic news today, well, it's the big one, isn't it? But it could be a damp squib as well. You get all of this excitement as we head into the NFP numbers. And then it turns out to be nothing, but we'll just have to wait and see. But it's forecast at 147, 142, and if it comes out about the same, then it is going to be a non-event. But we need a bigger disparity in those numbers in order to create some volatility for today. So that's the one. Expect the markets to be sideways up until that number comes out. All right, and speaking of the markets, let's take a look at yesterday's Dow, work our way through as we normally do. And in the Dow yesterday, it was a down day, and overnight prices have found support at the 20-bar moving average so far. Market managing to hold at this level. 30-minute chart is a mess. We started off by moving lower. We had a rally back with the breakfast traders on the futures market. Cash market again, that sell-off as we see there. Then we had the services news as well. Market then pulling back again, but overnight prices are starting to find a bit of support. Need prices back above the close and the DP there in order to move higher, but very choppy for the Dow. German DAX, another down day as well. Market needs to stay at the 20-bar moving average, otherwise we start switching a bit there on the downside. All-time high still at 19,493, so a good pullback there at the moment. Again, the non-farm payrolls could help support this market today if they come out less than forecast. I'm sure they'll use whatever information they can to try and pump the markets back up. Yesterday we saw a bit of a sell-off to start with in the DAX. The market then rallied, and then it became very messy in the afternoon as prices were sideways and just chopped in a range. In the S&P, also support at the 20-bar moving average for this market at the moment. All-time high still at 577, 3.3. 30-minute charts, again you can see that choppiness. We were down, we rallied, and then we had the news there, the ISM, etc. And then the market has moved higher overnight, and the S&P is actually above yesterday's DP, so lending a bit more support there than the other markets at the moment. In the UK 100, prices remain sideways. There's not a lot to report on this market at all. You can see that we moved higher to begin with, but a bit of a pullback, and then rallied again, and then the US news items at lunchtime soon put pay to that. The market down at the close and below the DP there as well at the moment, so stuck in the sideways range for the UK 100. So in the US dollar, continues to move higher. We've had 1, 2, 3, 4 up days for the US dollar, finding a bit of resistance to the left there, again depending on those numbers, but we can see we've got a bit of a sideways move starting to develop there in the US dollar. It depends what happens today, unless it breaks through and continues to move higher, or it then starts to reverse and make its way back to retest the 100 level there. Let's have a quick look at the metals. And completely wrong about yesterday. We've managed to move the markets to the upside, and they're moving once more, which is very strange given the fact that we've got this so-called hot data at the moment, because normally the dollar rising, the bankers take the opportunity to slam the price of silver, and it's not being slammed. So this is very interesting, particularly as we're sitting at this 32.50 level. Are we about to see the market break out from this as we head into October, very early October of course? But 32.69 is the figure that we want to take out, and 32.50 obviously is the previous high. So yeah, very interesting is all I can say about that at the moment. And as I've maintained before, until we get above $50 an ounce, then we're not in a safe place at all with regards to prices being slammed back to the downside. Yesterday the markets were sideways, and again the data being hot should have the opposite effect, but it didn't. You can see there lots of volume yesterday as prices were pumped to the upside and were already above yesterday's high, and the dollar's up as well. So again, something is happening there. Daily chart of gold heading back to the all-time high as well. That's going to be an interesting one at 130 as well. And yesterday with the ISM news, you can see the market there sideways and then breaking out to the upside as well, and overnight also taking out yesterday's high as well. So let's have a look at the gold-silver ratio. So this actually moving down. I thought yesterday we were going to start seeing this moving back to the upside, but we turned back to red, and we're red overnight as well. So let's just squeeze the chart up a bit and see what we've got here as far as the next downside target. Well, we head down to 76 if silver is allowed to move. Yeah, I mean, there's not a lot else I can say about that, but it's moving in the right direction at last, and being allowed to move to the upside. Well, that's until we get the NFP numbers, of course. We'll see what happens. It's Friday. They like to slam the price of silver on Fridays as well. Right, let's have a quick walk through yesterday's trades in the German DAX. And kicking off in the morning, we've got prices sideways. Bit of a clue there to start with that it's going to be choppy. Market moved back up above the low, and then we got into prices just trading sideways, and then continuing to move down a good distance there, as you can see, moving down about 80 points before the market then found support. And the only thing I could say is if that you were on this trade, given that we got NFPs today and yesterday's ISM in the afternoon, is that you take the money and call it a day, because this is what can happen after. You end up giving it all back. As you can see, 3 trades there, and then I think market then moves back to the upside there as it moves through the morning there. So yeah, you want to, if you trousered 60 or 70 points, turn it off and go and find something else to do, particularly in the current climate. Normally you wouldn't have a problem, because you wouldn't have the sort of bit of wild volatility that we've got there at the moment. It's been like this all week. It's not as if it's new for yesterday. So prices move back above the low. Always try and do that. And then we got into the news yesterday, the claims, and then into the other inflationary data, and the market sideways. And then we had a potential buy signal that came just after the news, with the market moving up, and then the market got slammed. And you can see other signals being generated in between there, but not being filled. I'll just bring it back if I can. There we go. So a potential buy signal there. The market not filling this one. And then prices following the Dow with that very sharp and abrupt up and down move that we saw yesterday. And then just to finish off in the afternoon, there's another potential signal there. But if you've made the money in the up move there, again, given the type of markets we've got and the news that's waiting to be released today, take the money and call it a day. Market up at the 200 MA there into the evening. Whoops, a bit too far there. Towards the end of the recording there at 17:30 yesterday evening. Quick look at yesterday's the overnight action, and let's just squeeze the chart up a bit so we can see where we are in the bigger picture and what targets we've got. So we've got the high is some distance off there from this red line is 100. So we're talking about 120, 130 points up to the high. Market's holding at the 200 MA though at the moment, which we can see there, and the close. But it would need to get above the DP and the R1 in order to get to yesterday's high. If the market takes out the close, well, it's certainly going to retest the low. And then you've got the S1 and the S2 there on the downside as well. Okay, that's it for this one and for this week. So have a great day, have a great weekend. Let's see what those numbers are at 1:30. And as ever, thanks for watching. See you in the next one.